India's e-gaming industry heaved a big sigh of relief in August this year, after a prolonged period of uncertainty when the 51st meeting of the Goods and Services Tax Council announced the levy of a 28% GST on the face value of entry-level bets. Earlier, the GST Council had imposed a uniform 28% tax on the full face value for online gaming and not at the entry level. It means the government will continue levying 28% GST on the face value, but this tax will now be levied only on the initial amount paid on the game and not on the total value of each bet placed. But this relief was fleeting, as one after another these online real money gaming companies started receiving pre-show cause notices. Business Standard recently reported that about 80 online gaming companies are likely to face tax notices for alleged GST evasion of 10,000 to 12,000 crore rupees. Another Business Daily claimed that the Directorate General of GST Intelligence has sent out a dozen pre-show cause notices to online real money gaming companies over alleged GST evasion of about 55,000 crore rupees. Last week, Delta Corp got a tax notice for 11,140 crore rupees along with interest and penalty for allegedly not paying GST on the gross bet value. The company said it will challenge the action and proceedings in court. Fantasy sports platform Dream11 got a GST notice of over 25,000 crore rupees, possibly the largest indirect tax notice served in the country. According to reports, these companies are looking at contesting the GST being applied retrospectively on their revenues prior to the GST Council's decision in July to impose a 28% tax on full face value. One of the largest gaming startups, Dream11, has already moved the Bombay High Court. The company claimed that the notice and investigations give retrospective effect to the amendment which will come into effect from October 1.
Since there are pre-investigation notices, obviously they can be issued at any point of time. But probably the fact that such a huge number of them have been issued at this juncture is probably got to do with the push and pull that is happening with the government or the regulator in terms of the new regime that has been put in place. There is a lot of pushback from the industry. And I think the government is trying to, or the regulator is trying to use some of these mechanisms to try and get the industry fall in line with.
The government has also cautioned these companies on the proposed self-regulatory bodies. It fears that major gaming firms could end up having a dominant presence in these bodies. Sources said that if the Ministry of Electronics and Information Technology finds that SRBs are being backed by big players and that the bodies lack independence, government certification of games will be considered instead of self-regulation.
What the government is trying to ensure that there is equal representation. And there are always chances in a nascent industry like this that such bodies may get influenced or may be, overrepresented by some of the bigger players, and smaller players might not find a voice. But I think rather than government setting up its own self-regulatory body or going in for certification of some of these self-regulatory bodies, it might be better that the government may tweak in or may introduce certain regulations or notifications wherein the membership of the bodies could be further spread out, or representation in the membership could be further spread out.
Experts say that in a tax regime with multiple rates, similar transactions are taxed similarly from a policy perspective, while sin goods are taxed higher. Citing the example of 28% GST on tobacco, they question that should online gaming be classified under the same category. So, what could be the way forward?
You can see the impact across, layoffs and certain companies also closing down. What we look forward to, obviously, is the a relook at the, a review to be done within 6 months of implementation. Assuming that October is the start of the new regime, then 6 months, within 6 months of that, or after 6 months, that review would take place.
India's e-gaming industry is at a crossroads, facing both taxation challenges and societal biases. Experts say that the worst affected will be the small and medium gaming companies. While some industry insiders have hopes from a review of the tax imposition in coming months, others believe that same yardstick be applied to the entire gaming sector.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.